Hello guys, welcome back to my channel. In this video I will be making a very important case on key levels, right? I'm going to be taking you through a study on key level. As a matter of fact, I want you to pay a very rapt attention on everything I'm going to be saying, because this topic is one of the major basics, or it's one of the basic principles on which our trading strategy is founded. Okay, so it is one of the basic principles, the major basic principle on which our trading strategy is built. Okay, so you have to understand it very well. This is our course outline actually. So key levels, and I'm going to be taking this course on these three subheadings. Number one, how to map your key levels, how to draw your key levels. By the way, key levels are support and resistance. Okay, so when you hear key levels, it simply means support and resistance. Now the second subheading will be bounce off of support and resistance. Okay, bounce off of key levels. And then the last one will be break and retest of support and resistance. Break and retest of key levels. So key level strategy as a topic now, and let's get to the charts right away. As you all know, I believe more in practicals rather than theories. So this is the chart, and this is actually 75. Now you can start your analysis from anywhere, but I want to start from the weekly time frame. Okay, if you want to start marking your key levels, you start from the higher time frame. 4 hours is okay, daily is okay, weekly is okay, depending on your trading style. If you want to scalp, there's no point going to weekly time frames. It might not be, very necessary for someone that wants to scalp. But in a situation whereby you want to, day trade, it's also good to go to the weekly time frame or daily time frame at least, because it will give you an overview of what the market is doing generally. Now, another thing you should know is that when marking your key levels, there are major areas where you should pay attention to. Major areas. Number one, you should pay attention to the previous highs and lows. Previous highs and lows. For instance, I have this low, you have this low, and we have this low. These should be the areas where you should pay more attention. Now we also have this high. Okay. Now the next thing you should also have in mind is that your focus should be, if you are marking from the weekly time frame, what you should do is look at where the current price is. This is it, where the current price is. Now look at the low, the immediate low below it, you mark it, and then the immediate high above it. Now for the immediate high, this is it here. Looking to your left, this is the immediate high. So this high and this low are the things we are going to mark. Marking these other lows may not be necessary, because this is the weekly time frame, and before price will come back here to take a long while, and price might have even changed what it is doing currently. So before that will happen, we would have done the analysis again. All right, and I am not swinging. I just want to day trade and also scalp. So there's no point marking all these areas on the weekly time frame. Some people go as far as going to the monthly time frame to check out things. It's also okay, but I think you don't need to do all that currently. But if you want to do it, good and fine. Now, the way you mark your key levels or your daily time frames or your weekly time frame is also the same way you mark your key levels or your monthly time frame. So I'm just teaching you how to mark your key levels. You can apply it on any time frame of your choice. Okay, so another thing you should know is that You should also pay attention to areas that have had multiple rejections. Okay, for instance, here we've had this rejection, and rejection. So areas of multiple rejections have more, efficiency. All right. Now, there are two tools you can use to mark your key levels. Number one is the rectangular tool. This is the rectangular tool. You can make use of it to mark your key levels. Then, secondly, you can use the horizontal. So, I'm going to, use the both of them at different points, and I want you to choose which one you prefer. So, in this case, I'm going to be using the horizontal first, right? Let me use this horizontal line to do this first analysis. Then, the next one I'll use the rectangular tool. So you choose, you tell me in the comment section which one you prefer. All right. So let's start right away. So the first thing I said, look at the current price where it is, then check the low below it, the immediate low below it, and this is it. So what I'm going to do is I'm going to place my tool on it. So this is basically the low here, and that's this bearish candle here. See, now that I've placed it below, look to your left, you can see that it coincides with this place and with this other place. Okay, so this is a very valid support level. Now let me mark the high above it. This is it. Price has not gotten to it. So if you look at it here, you see that price rejected there before, and here again it's rejected. If you keep listening to the left, you see multiple rejections. So this shows you that it is a valid level. Okay, now also pay attention on how I do the markings. You can see the line is not on the top of the highest wick, it's not also exactly on the body, but in between. Reason being that if you go to the lower time frame, this candle wick here will become body, to become candle bodies. Okay, so I just try to place it midway where it will balance properly. It's just a matter of balance. Okay, nothing too deep, just a matter of balance. All right, so now I've done that. Let me now go to my daily time frame. Now on the daily time frame, I'm still going to apply the same principle that I showed you guys. Now I want to look out for the lows, okay, and the highs. So let me bring my tool again. Look at this low, I'll place it there. Look at this other low here, I'll place it there also. Okay, and then we have a high here. So let me get my stop to the high. All right, yeah. So this is it. We have this high. So basically, that's all you need to do. Then we'll now go to our H4 time frame. Now on our H4 time frame, this is what we have here. On our H4 time frame, this is what we have. Obviously, you should see and know that price is in an uptrend. Price has been trending upwards overall, so it has been trending upwards here based on market structure. Price makes a high, a low, a higher high, lower, higher low, higher high, higher low, higher high. So we expect a higher low and then push up again to higher high. That's what we are expecting price to do right away. Okay, so we've marked everything. We can now do some adjustments if there is any one to do. Okay, I think this can adjust it, yeah, to get better touches and better lapping. Okay, so then though, should we do anything here? I think this is also okay here. This one can also be adjusted. So yeah, good. So here we have this touch, and this other touch. Good. So this is very okay. Now another thing you should have in mind is that when marking your support and resistance, you should not take them as just this line that you have drawn here, this solid tiny line you have drawn here. Instead, take them as a zone. Okay, so sometimes price can go below it, like price can go a little bit above it. Okay, but I can wick above it, can wick below it, like this one. It is all the same thing. It is still counted as the level. Okay, it's a zone, not a tiny solid line, as you see. Now the next thing we should do, let's go to our H1 time frame. That is where I stop my markings. Okay, this is the H1 time frame, and at this point, so you can also check out if there is anything you need to adjust. Maybe to do some adjustments to have proper okay, so I need to adjust this one here. That's the best place for it to be. Yeah, so then I need to draw another line here, yeah. So this is my other key level. It's the resistance level. Okay, so you can see how what price has been doing here. So on this H1 time frame, you can see the price action. Price has been dropping. So here you had the high, a low, higher high, then price came back, made a lower low, then made a lower high, made a lower low again. So this is an equal high that it has made here. So we expect it now to drop, come and make a lower low. So basically this drop is either up to this point or somewhere here, right? Just that's what it is. So expecting this area for price to come back to it. You can see that price has rejected here multiple times previously. Price rejected there multiple times. Look at it. Price rejected here, here, and even here. So price is going to come back to it, and then it will start pushing up. Remember, we are in an uptrend. Overall, we are in an uptrend from the weekly time frame and daily time frame and H4 time frame. We are in an uptrend, so you should have that at the back of your mind, that your higher time frame has already shown you the directional bias. So that's what you should work with, but you should find out the more details from lower time frame, which is what we have done. Okay, so our bias is bullish, but before we start going bullish, we have to satisfy the bearish move, which is just a retracement. So now on your H4 time frame, you can see it is obvious that we are in a bullish market. On the daily time frame, it is still obvious that we are in a bullish market. So on your H1, see that price has made a bullish move here. It has to retrace before pushing up again, because we know that price moves in waves. It doesn't move in a straight path, it moves in waves, just as we have here. Price moved up, came down, moved up, came down again, moved up. Now it has to come down, then before going up again. You can see that. So that is just what price does. So with this knowledge, you know what is happening. It has bounced from this key level, went to retest this one, it has bounced, now it's coming down, going to come here, bounce, because it has tested this one before. So if it comes, it's going to break it, come here, bounce around it, and then this bounce will now trade it upwards. Okay, now that is just how to mark your key levels, right? Remember, I'm teaching you how to mark key levels. And see, we've marked it, the lows and the highs, previous lows and previous highs, areas of multiple rejections, sharp turning points. Those are your key levels. Those are the places where you have to mark your key levels. So judging from recapping from the weekly time frame, you see what we did. First, we marked this low, marked the low here, the high above. Then went back to our daily time frame. We marked the lows and the highs in between, the previous ones that we marked. That's how we got these lows, highs and lows here. Then on the H4 time frame, what they do, we made some adjustments, placed the lines where they're supposed to be, and then marked the next ones that we needed to mark, the next key level that we needed to mark. Now we have we went to the H1 time frame. Now if you watched our previous video and attended our previous class, you can see what is happening here. Now that price has rejected the key level, you can see the candlestick pattern that is forming. I want somebody to tell me this candlestick pattern in the comment section, what it is. If you watched my previous video, you attended the previous class, I want you to tell me this candlestick pattern, what do we call it? See, these three candlestick pattern that I've just marked here, I want you to tell me what is it called and what does it signify. All right, yeah, because it signifies something very amazing. It is when you see this kind of candlestick pattern forming at your key level, it is time to make money. So tell me in the comment section, what candlestick pattern is this? All right, so go and do it now. Okay, so let's go to H1 time frame. I stopped marking my key levels on the H1 time frame, and I have marked it, and we see that price is coming down, going to come here before pushing up. Okay, so that's it. Now like I said, price is going to reject here and come here to bounce off, which takes us to our next topic, which is bounce off of key level. Right, that's it. How to mark key level, we have done that. Now the next one is bounce off of key levels. Now the bounce off of support and resistance. So let's go there right away. Okay, so how do you trade these key levels after marking them? After marking key levels, there are two ways, like I said, break and retest, and also bounce off. Bounce and break and retest. So we want to look at the bounce. How do you trade a bounce? Okay, so how you trade a bounce is simple, very simple. Whenever price gets to a key level, you want to see a bounce from that key level. For instance, look at what happened here. Price was coming down. I want you to take note of this. Guys, pay attention to this and understand it. Pay attention to this and understand it. Look at what happened there. Price was coming down with aggression. Then it got to this key level here where we marked already. And look at what happened. Price, first tap, it rejected, created this indecision candle. Second tap, it rejected, created this indecision candle. Third tap, it dropped and then gave us this bullish pin bar, which is a bullish rejection candle. Dropped again, pushed up, gave us this engulfing candle. You can see this was engulfing candlestick pattern. This is massive bullish sign. This is what we call bounce. This is what we call bounce off of key level. So price has bounced off from this key level. It has bounced off, and it is very obvious. You can see it, I can see it, we all can see it. So what do you do at this point? You just take your buy here and place your stop loss below. Okay, simple, as simple as that. Place your buy here, stop loss below, and you target this key level. And what happened? Price got there. Boom! Very simple. Very simple. All right. So that's a bounce. That's a bounce. Same thing here. This is another example. When price pushed up from this level, what do you see? Price pushed up from this level, continue pushing up. It got to this key level here, this higher time frame key level. Maybe we should go to H4. Yeah. So price got to this higher time frame key level. I'm sure you can see it now. You can see it better. So price got to it. What did you see? It bounced, dropped, went again to test it, bounced, and gave you this indecision candle. Next candle came, dropped again, giving us this pattern. And we are seeing the same pattern want to form here. So this pattern gave us here. I don't want to mention the name because I asked you to I already asked people to tell me what this pattern is in the comment section. So if you don't know the name, go to the comment section. You will see the name of this candlestick pattern. And if you know it, let me know in the comment section also. Type in the comment section so that those who don't know it will go and watch it and find out. Look at it, this candlestick pattern here. 1, 2, 3. There are 3 candlestick patterns. One bullish, one indecision candle, and then one bearish candle. That's it. So that's what it gave us. It's a bounce also, a bearish rejection. Then you can take your sell here, stop loss above, and you can see it dropped, targeting this key level. Yeah, that's it. Very simple. That's how you trade bounce. Okay, very simple. You can keep seeing the bounce sits here. Look at this bounce. Price bounce from here, came here, bounced again now. Just like that, guys. Just like that. You can find it all over the charts. Price came here also, bounced off and pushed. So how do you know bounces? How do you know bounces? It's just simple. Candlestick patterns. When price gets to your key level, begin to do what? Begin to read the candlestick pattern. I told you guys previously in our first class that when you are trading with candlestick patterns, you should pay attention to those candlestick patterns when they are playing out within a key level. If they are printing around a key level, that is where you should pay attention to them. And now this is a key level. You can see the candlestick pattern here. You can see the rejections. You can see the rejections. So why not take them serious? Why won't you take them serious? Of course you will. This is it. Very simple, very straightforward. If it is simple, let me know in the comment section. If you're understanding it, let me know in the comment section. Okay, so this is it. Very simple. Most times I try to take my trade from the 15 minutes or 5 minutes time frame, sometimes 1 minute time frame. Extreme scalping strategy. And I'm thinking of making a video on it. Extreme scalping strategy, how you can trade the 5 minutes and the 1 minute time frame. Extreme scalping strategy. If you want me to make a video on that, let me know in the comment section. If I get enough demand on that, I will quickly do the video. Otherwise, I might not. So let me know in the comment section. Let me know in the comment section if you want me to make a video about the extreme scalping strategy. Let me know. Okay, so this is just it. I've done that. Now let's go to another chart. Let me use the rectangular. Let me use the rectangular what do you call it? Let me use the rectangular tool to do the analysis, to mark my key levels, so that we now do the we now look for we now do the next topic, which is the break and retest. Here we have marked the key levels with the horizontal line, and we have studied the bounce. Okay, so we've marked key levels and we've done the bounce off of key levels. So let's go to another chart and use the rectangular tool, and then study the break and retest. Which chart should I use? Okay, let's do gold. I like gold. I also like Bitcoin. So which one do I do? Okay, let's do gold. Yeah, gold is okay. So gold. So guys, we are live on the gold chart, and you can see that gold has been super bullish, like crazily bullish. So let's go to the weekly time frame and see. This is crazy, guys. Gold has been so bullish that, like, oh my goodness, so bullish. So I don't even know where to start. Don't even know where to find the low. So I think let's start from here. This is now we are using our rectangular tool. This is a low we should start with. Okay, so very simple. It's nothing complicated there. You can also mark the high. Now in this case, there is no high to mark. The gold is at all-time high, so there is actually no high to mark. But we can mark this week, right? Let's just mark the week. If I should go to the monthly, you see that gold is at all-time high. Look at it, all-time high. Jesus me, Jesus. Okay, so let's go back to daily. So this is daily time frame. This is what we have on the daily. So okay, so I think we have something to mark here. We have something here. Okay, this price didn't really come back here through there, so let's just mark that low. Let's mark the low there. Yeah, we have that low there. This thing shouldn't even go that far. It should come close. Okay, so this is too long. Come closer. It's too long. Come closer, boy. Okay, so we've marked these things. So let's go to H4 time frame. You can see gold has been, soaring so high. There is even little or nothing you can do about it. There is nothing to even mark. There's nothing much to mark. But at this point, we've marked our key levels, right? We've marked our key levels. So if we go to H1, let's see if there's anything we can see there. There's really nothing much. Basically, there is nothing much there, but we can see here this previous one, just for the purpose of the lesson. Let me mark it and use it to pass across what I want to say. Okay, so we have this level here. Okay, so this is a level that got broken actually. Yeah. So at this point, do we have any level? Nothing. But it's just doing things. So okay. So let's see. This is 1 hour time frame. And we have this key level also. So we'll not forget that one. Yep. Is a key level. So this key level here, we are really not seeing much things here. We are really not seeing much. But at this point, maybe I should go to M30. Okay, so there's nothing to go down to. Can't mark. I don't mark beyond the M15. Now I don't mark beyond H1. Sorry. Okay, M15 down is now for entry. Okay, so this is our H1. Basically, there's nothing there. What we want to see is basically what we are doing here. We have marked our key levels and we are looking to trade the break and retest, right? The break and retest. So you can see at this point, price. This is exactly what you are looking for. A good example of break and retest. This is a key level that was formed here. So what happened? Price came, broke above it, right? After price broke it, you can see how it came back, retested it. So this is exactly what we call break and retest. It retested it and pushed upwards. Now it formed this candlestick pattern, which is a morning star. It's a morning star candlestick pattern that was formed here. Okay, so price pushed up with it. This is the break and retest. So price from this morning star, make your entry at the close of this candle here, this bullish candle here. Place your stop loss below here, and then target a minimum of 1:2, or at least this key level. Target it. That's how we trade it. All right. So at this point, what we are expecting here, because everything here seems bullish. So what we're expecting here is actually for price, to go close above this line here, close above this key level, and then give us a retest, something like this, give us a retest of the key level, and then we buy. Okay, if we see rejections according to candlesticks, then we'll buy. Simple. That's what we're looking for. Okay, so probably it may happen anytime soon. It may happen today. Today is actually Friday, so price may just, okay, this is a trend line strategy. We'll learn it later on. So I can also use the trend line strategy to find entry, right? But that's a topic for another day. Now this is actually how you use the what do you call it, the rectangular tool to mark your key levels, and how you trade the break and retest. Okay, so you see what I told you guys I'm expecting here. I said I'm expecting price to break out, retest, and then we'll buy. That's exactly what happened there. Price broke out on this key level, retested, and you can see how it bought. And that's exactly what we are looking for. That's why I told you guys that this strategy works so well. That's exactly the same thing that happened here. Price broke out of this key level, came back for a retest, and that was it. It bought all the way to this point. So this is a winning strategy, guys. This is a winning strategy. All you need to do is to learn very well, master it very well, and you are good to go. All right, if you got any value from this tutorial, I want you to smash the like button and subscribe to the channel if you are new. If you haven't done so, subscribe and join our free Telegram. The link is in the description box. Reach out to me directly via Telegram. You can contact me for mentorship, account management, VIP signal, or any other trading related business. Okay, so this is the Alpha Trade saying, as long as you continue learning, as long as you continue putting in the work, it can only get better. Goodbye.